Good afternoon, everybody, and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, April the 20th, a little after 4 p.m. Eastern Time. I want to welcome again everybody on board, new as well as old. And like always, let's get right into it and get through the disclaimer. This webinar is for educational purposes only. I am not soliciting any kind of trading advice or giving any trading advice. Trading does involve risk, especially options. These webinars are designed for educational purposes only. Okay, how did the market finish up today? 208 up. It was a good day. Rebounded from yesterday, Friday's fiasco. E-mini is still kind of going sideways and crazy. And the VIX is, well, it's down a little bit, but kind of flat from Friday. Not much change, to be honest with you. So let's take a look at the macro picture. Once again, on the left is the Dow Jones, in the middle is the S&P 500, and on the right is the NASDAQ. I've added in another subgraph, and I'm using a little shorter term, 3-month. The subgraph is a ThinkScripter written stochastics momentum indicator. It's more of a leading indicator. It leads the rest of the indicators that are on my chart to give me, as well as you, a heads up on where the momentum of the advances and declines are going. And whenever you see a red arrow, that is not a template, that is a trigger for a short. Green arrow indicates a long. When you see a white arrow, that's a template. We don't really go by templates, even though there could be some shift that happens, which, as you see here, it did pull back a little bit. And it gave an indication that this may be coming. Of course, nobody really knew Friday was going to come. That was just a blind side that hit everybody. How did you guys do last week trading? Anybody make some money? I made some good money on Priceline last week, doing some bull call spreads. I know, Earl, yours had to come out well. If you got out on Thursday, then I think that we talked a little bit about some of those trades that you were doing, I was doing as well. Anyways, I am long-term bullish. I am short-term bearish based on what I see on these charts. We had a major pull down on Friday on all three indices, including a turnover by the Hull on all three indices. I have a not a template trigger, but a normal trigger for a short for the stochastics momentums on the S&P and the Dow, as well as I have a detrending price oscillator that broke the Bollinger Bands on the S&P and the Dow. It tried to pull up today, but it didn't. It tried to break the Bollinger Bands. It didn't on all three indices. And if I take this and maximize this sell, and you look at, let's see if I go to a 6-month, if you can see it better. Whenever you see a trigger for a short, inevitably the market does go down. Whenever you see the trigger for a short, the market went down. The market went down. Furthermore, when you look at this and you say, let's see if I can recognize a pattern that's similar to this, where we had a doji and a strong candle down, and then a candle that pulled up, that the body really is still within the body of the bearish candle. And you kind of see that right here to a certain degree. You know, this was a doji, this was not, but it pulled down hard. Then it pulled up, did not break the Bollingers, pulled back down. We had a pull down here. The next day, it went down a little bit further. So I'm short-term bearish still. Tomorrow will be the tail of the tape, though. So that's my outlook right now. We have been in a choppy market, folks. If you look at the SPYs, this is a 3-month calendar, and I draw a box basically. You'll see the where we're in. Oops. Let's try that again. There's our box. That's our trading range that we've been stuck in. I could have brought it up a little bit higher, but you see this that we're stuck in. So if you follow this pattern, we could be going back down to a low of the 89 or 49. Those normally act as support or resistance. Now, as I say, long term is still bullish because the 49 is above the 89. That's on the SPYs. If you do the Qs, pretty much identical. Same thing, same kind of trading range. If you do it on the DIA, I mean, I could do this all day long. It's pretty much the same. I think you guys are getting the gist of what I'm trying to show you here. Now, if you wanted, I could switch this chart to something really simple. I suggest everybody who's listening, I'm trying to go back to simplicity because there's an old saying, less is more. And one of the things that I've done is created a simple chart like this, which is Bollinger Bands, a 5 EMA, a 20 EMA, a 50, and a 200. Could even make it simpler than that, which I want to show you on a couple of stocks. And that's just using a 50 and a 200. A lot of people do that. You know, if a stock is trading above, it's an old IBD rule, above the 200, then, you know, you play the pullbacks. If it pops up above the 50, and when the 50 is above a 200, that's a trending, obviously a very trending movement. And this is on the Dow. I mean, I could go on. What I'll do is I'll put together a list of 12 indexes that I routinely track. I just did 3 of them: SPYs, Qs, DIA, IWM, the VIX. And this is actually a good sign. As you see, the 50s cross the 200, right? That's a good sign for being bullish. The RVX, Russell is definitely not looking very good. And then if you track oil, OIH, and there's a nice pull up on oil, or USO, another pull up, trading above the 50. Umbrella Paul, it's tracking the dollar. It's definitely in a bullish trend. It retreats to the 50, used as support, bounced up, retreated back, coming up to a doji. FXE. This is the euro. It's getting trashed and continuing to go down. FXY. To find out what's going on in the Orient for the yen. This is for the currencies. And then you get into gold. Where's gold at? I have some support and resistance on here. Let me remove those. There's the gold. Not looking very good. I mean, the gold and the miners, I'm not very froggy about either one of these right now. There's the miners. Again, 50 below the 200, trading, using the 50 as acting as resistance right now. You could look at silver, SLV. And once again, you'd like to see all of this pop above the 200 before you really start making some trading decisions. And we all know gold, a good time to play is at the end of August. The run-up and the end of August into September is a real good time to trade gold. SIL, which is Silver Miners Trust. Again, this is almost identical to SLV. And last one is GDXJ, which is the junior gold miners. But you can basically see the pattern. This gives you kind of an overall perspective of from gold to silver to the dollar to the yen. I mean, I could throw in the ruble in there, but I don't think it's worth it. To the Russell, to the Dow, to the NASDAQ, and the S&P. So I'll include all of those so you guys can take a look at them occasionally and kind of see where the market is at. Go back to my normal studies that I use for triggers. All right. Earnings Central, folks. 265 earnings coming out this week. I've honed down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, of which 1, 2, 3, 4 I've mentioned last week. So there's actually 9 new longs, 1 short. ETFs are still, I think, into play, FAS and the VIX. Let's take a look at this. And feel free, guys, to pipe up. I'm going to be watching the chat box a lot more on any stocks you're thinking about. One I'm actually looking at, and I want to discuss this with you guys. What do you think of Amazon? Give me a yes for you like it, a no for you don't. Couple of yeses. It's not a real strong historical. When you look at seasonality, tab 3 at best trading a whole zone, and you highlight this area within April to May, you get a run up to earnings at 80%. Earnings on Amazon are coming out this Thursday, aftermarket. Okay, Jose, pipe up and tell me what you think of Amazon on Elliott. Okay, EW. Just tell me a yay or a nay. Doesn't have to be a lot. Just wondering what EW tells you about Amazon. Now, a lot of people, I don't know, some people out there are learning more and more about the Ichimoku cloud. And it's a pretty neat study to use to give you an idea. This big green line here is a 26-day lagging EMA. And whenever it's below the cloud, it's bearish. When it's above the cloud, it's bullish. The green cloud is bullish, the red cloud is bearish. These act the top and the bottoms of being at bearish or bullish clouds as support and resistance. When price is in the cloud, it's mushing sideways, you don't trade. So based on an Ichimoku cloud, and this is your trigger. The red line is a 9 EMA. The blue line is a 20 EMA. Excuse me, I think it's a 20 SMA. I'm sorry, 26. Yeah, it's a 26 period EMA. So whenever the red line, the 9 EMA, crosses the blue line, the 26 EMA, that's a trigger to go long. This usually acts as resistance or support. This will act as resistance. So Ichimoku kind of is mixed. Now that's on a 6-month daily chart. You can obviously go to shorter terms. One of the ones I like to use is a 20-day hourly. That tells you a different picture. And I'm always first thing looking at is this green line. Is it above or below the cloud? That tells me if this is currently bullish or bearish. So right now, oh, this is GDX. Let me take a look at Amazon. What a beautiful run up today, huh? Well, Amazon's definitely very bullish. Do you see how this acted? The edge of the bullish cloud on a 3-month daily chart acted as support. So price bounced off it, took off. We did have a cross of the 9, crossing the 26. So if you went just based on this, this is pretty bullish. Let's take a look at a 6-month. That's just as well bullish. 2-year weekly, very bullish. And that 9 EMA is just screaming up there. But this is a weekly chart, remember? So keep that in mind. So how many yeses did we get? We got quite a few yeses about Amazon. What I'm not sure with, folks, is this run up here is 80%, starting around the second week in April, which is really right in this area. So it did run up, pull back, but we do have a half purple hash mark, which indicates that Amazon could run up for tomorrow. Historically, however, you can't really glean any statistics out of it. Even if I use best rating of coordinates, try to find a trade within here. Well, it does give me a trade, but it's a 50-50 long. And I'm also asking myself, well, where is that stock in compared to its history? Well, it's way up here. But almost all stocks are sitting up here because it's just been such a run-up. But it is sitting at about the 95% of its historical movement. Best profit per trade would be the last technique I try to use to see if there's another trade within there. You got a 50-50 long again, a shorter term from 421 to 426, which encompasses earnings. So it's a mixed bag. You can't really use seasonality in regards to that. Now, one of the things that Amazon launched is Amazon Web Services, AWS. Are you guys familiar with that? A lot of people think of Amazon as an e-retailer, but it is also making a strong foray into shifting from just being a e-commerce company for e-retail to also providing cloud services and web services, which means they're kind of narrowing their gap a little bit with Google, you know, to kind of get into that space, not necessarily compete with them, but or take market share away from them, but probably to compete with them in that market share. So it's one of the things that I was reading about. This AWS is a hidden jewel for Amazon. It was founded in 2006, but a lot of people don't know about it. So a big telltale will be, because they just launched that really officially in the last 4 months or so. So the revenues that come from that will be pretty interesting to see if they're able to maintain their $380 level. So it's one of the key factors. Now, analysts are expecting a loss of about 12 cents per share. So if these revenues are lower, well, then they're going to tube the stock. But if AWS revenues come in well and they don't take as much losses, Amazon could take off. So that's kind of my take on Amazon right now. Statistically, or from a technical perspective, it's definitely in a bullish trend right now. It's sideways moving, waiting for earnings to pop. If you look at Where's the open interest on this? Let's take a look at May's. Well, you have a lot of open interest sitting here at the 400s for 1340. You have a lot of open interest sitting at the 380s. Now, that could be a $20 bull call spread people are doing. Let's see if that's also some strangles involved in there. Well, not really. There's not a lot of open interest or volume for strangles or straddles. There's 1100 here at the 380s, so of that 5,000 that's sitting there, there's 1100 that are using that as a straddle. So in essence, we've probably got, what does this cost? 380, 400, $9.93. Well, not too bad. Where's your break even? 389.93 is a break even on the stock, which is really kind of where it's at right now. So really what you want to do is have it go up. So anything beyond this, obviously you're making money. And you have a potential to make $1,000. Now, because it's a $20 spread, you need a $2,000 per contract margin requirement in order to execute that. We do have some bearish interest on here, but this also could be people are doing credit spreads expecting it to go up. And there's a large credit. That's a $15 spread, so $1,500 margin requirement per contract, but you're taking in 5.25. It's $525. So that's what that could be. Now, for you people that are more risk takers, you'd be looking at this week's expiration. Now, one of the things you want to look at, though, of course, is implied volatility. And when it's sitting up that high, that's one of the reasons I have this. With a 75.6% IV rank, I'd be very cautious of praying that spot month unless you truly, expect the stock to bust through, because all of that IV is going to be sucked out once this event takes place. So be careful if you're going to play the spot weekly on this. That same $20 spread is about the same price. You got a lot more volatility. Your break even is about the same thing, just a few cents away from where the stock closed today. Okay, let's get into some of the trades that I was looking at. Oh, before I do that, what do you guys think of Google? They're also coming out this week on Thursday aftermarket as well. Again, I didn't list these folks on the Excel sheet because there just isn't great seasonality in it. 60% probability to go long based on best profit per trade. Best trading of the whole zone. 70% probability to go long. Where is it sitting at its historical movement? Yeah, kind of about the 50%. If you look at what do analysts say, well, analysts, again, were mixed bag when it comes to Amazon. I needed to show you guys that. 14 hold and 13 strong buy. Well, actually, 15 buy and 14 hold. So it's kind of 50-50. Again, kind of like seasonality for Amazon. If you look at Google, uh, 23 strong buy. So actually 25 strong buy, only 5 hold. So we have a 70% historical, strong analyst recommendation, strong buy, target of 605, 600 way back in November, target of 605 here. Another thing you can do when you do Google, you can see where support and resistance is right here. They kind of do that for you on Earnings Whisper, which is nice. Visitor sentiment says hold, but analysts say strong buy, 25 out of 28. Where are they sitting at right now? Well, 75% probability they're going to pull up tomorrow. 49 is above the 89. 552 is going to be a little bit of resistance. Next is 586, then 583. That's based on a retracement of the last 6 months to its last high of 583. This is another setup that I use. A 9 EMA that crosses a 30 WMA, a weighted moving average, 30-day period weighted moving average, and then of course the 89.49. This is for more short-term trading. It works real well though. When the 9 crosses the 30, you go long. When it crosses the 30, you go short, that kind of thing. But that's not the one I wanted to show you. I wanted to just show you the basic 5200. This is what I'd like. I'd like to see Google trading above the 200, but it may not do it. Of course, we had a double top here. That's why it came down. You can see some people are doing straddles right there at the 550. $5,759 open interest. 5,759 open interest at the 550. Kind of expensive, folks. $2,870 per contract. I think if you said, well, I'm leaning towards this thing being bullish, 516 is already kind of past, but 516, if you look at the date right here, is really right here. Stock is, it closed at 543, and today it closed at 544, so it really hasn't moved. So you could really say to yourself, okay, this percentage can still be applied to 5.06. Puts your target at 571. For $5.10. Buying the Maze, that's less than 1%. And that puts you, can you see these numbers here, folks, or not? I kind of changed them so they wouldn't stick out so much when I'm looking at the charts, but I can change that so people can see it a little bit better. That's right between the 78.6 and 100% retracement. So it's right in the middle here. And if you think about using just linear regressions and you say to yourself, where's a sweet spot? It's between the 50 and the 90 on best choices linear regression, which would be right in this area here. If I move my cursor off the chart and my eyes look at what that mid is, between the mid and the high, that 571 is really pushing it towards the high. I probably would not go that high up. I'd try to go more towards the probably the 550, 560 area in here. And I'm not real froggy about this right now. There's not a lot of great earnings trades this quarter, guys, but you know what? It's 4:30 Eastern time. I'm just going to get into the ones that I did like. United Rental. Let's go at it this way. I did a 90% or greater win probability. One of the ones that I was looking at is Owens Corning. It's a 100%er. A nice looking tight chart upwards, sitting at the bottom of linear regression when I looked at it on, this is Friday's close. I don't know what it did today. Yeah, basically a doji. If you look at 2 years, and earnings are screaming through the roof. So it looks nice from a technical perspective, as a nice seasonal move. When I analyzed this, I was looking at the this is one concern of mine, is there's 5 strong buy, 10 hold from an analyst standpoint. But from a technical standpoint, seasonality standpoint, it looks good. Another thing that looks really strong is there's 15,425 open interest. This is at OC for the 43s. And there's 7,500 contracts bought today. And there's nothing like that on the short side. So there's somebody knows something coming on here. 79% probability of touching, 38% of probability of being in the money. 42 delta means currently less 3 cents theta, so you're getting 39 cents current movement in your option per dollar movement on the stock currently. That's buying Mays. And OC is coming out this Wednesday before market. So I put OC, I like that, 43s. Anybody trade Amphenol at all, APH? It pops up on a lot of searches for best choice. It's a 90% probability. Sitting again, I like the tightness of the chart, nice straight up lines, sitting at the bottom of the channel at 5.5% extreme. I don't know what it did today. Well, today it, see, I liked how it bounced off the 50 right there on Friday. I thought it was going to pull up. It did, but now it's saying there's a 75% probability it may go down tomorrow. The MAC is kind of still sloping down as well. But that's a really nice looking chart. 49 just nicely right above the 89. We're getting a lot of up and down, but the stock evidently does that. You know, it's not a real volatile up, down between the linear regressions. Now, you did make note that it's a 52.82% IV ranking of its last 52 weeks, 265 trading days. And there's not a real lot of excitement about it. There's 926 open interest, 131 today. So, take it for what it is, but it's cheap. When I see that kind of disparity from at the money, well, actually, this 60 is currently at the money. But when there's that kind of huge spread in a $5, it really concerns me. It's only because there's no volume or open interest. If you go to June, really doesn't even have volume for me. So take this with a grain of salt, too. I listed May 60s, though, if anybody's interested, only because I put it down for 55 cents. That's what you can get it on the mark. 3M is coming out this week as well. It's one of the ones that was mentioned by Goldman Sachs that they're expecting unusual volume and an unusual movement after earnings. MMM, 90% probability. I had actually looked at this thing from a short-term pop. Boy, just sideways meandering, up, down, up, down. Earnings are, again, Wednesday before market. mixed bag when it comes to the analysts. Pretty strong seasonal though. Where's it sitting at right now? Yeah, kind of following its historical pattern. Up, down, up, down. And you can kind of see where towards the end of the month it pops for most of the years. Linear regression is still pulling up. 3-month, sitting at the bottom of the channel, nice up and down movement. $5-6 spread, so there's not a real huge movement on that. So when I looked at what expiration month, what strike, I was actually, you could always buy time, 170s, based on a historical movement of about 4.53%. That's very realistic, with the stock sitting at 164. I was actually looking at the weeklies only because I saw the IV was very, very low. It's at 25.89 for the 170s. I actually was looking at the 165s closer to the money for 191, which is still barely about 1.1% premium. And there's a 92% probability of it's touching. And the IV is only 27.49. And it's very, very low compared to its historical percentile. So that's what I was looking at is a, and the target for best choice is about 168. So if you analyze this and put in MMM, let's get rid of all of these and say, okay, what if I bought the this week's expiration and I bought the 165s for 97 cents. Evidently, well, no, hold on, I'm sorry. I have to go to today's date. My apologies. I go to today's date at 165 for 191. Hold on, I got to move this thing because it's not moving. There it goes. Okay, so we're going to add this as a simulated trade. We are going to buy the 165s for 191. Slices I'm going to reset for 10% movement. But really, what am I expecting? A 4.53% movement. So let's use 5%. Or even, we can even go lower than that. You can adjust these things here. There's 5. Let's do 4%, which goes to 171. If we pick the 165s, now I'm going to go to the date. When is MMM coming out? MMM is coming out with their earnings Thursday before market. So I'm going to move this to this Thursday to see if it pops 4%. I'll have made $420 on my $191 investment, which is a good return, folks. That's, of course, on the weekly. So if I go to Friday and say, what if I have to wait till Friday, that's still 418. So a 4% move, if I'm expecting a 4.53 with a 90% probability, good risk reward, right? And if we do this on the day of earnings and it happens to go up 4%, it's $420 for a $91 investment. So it's definitely a more than 100% return on my money. For those of you that can afford it and buy 10 and spending $2,000, you make $4,200. It's one of the tools that you want to be able to use for best choice. Now, remember we used to do the probability analysis, the probability cones, right? Probability cone says 169.42. So if I wanted to be more conservative, let's go back to 1 and say, okay, let's say it doesn't go 4%, it goes 3%. I'm still making money. Is the risk reward still good there? That's taken to 169.45. Probability curve is 169.42. A 3% pop on the day of earnings. I spend 191. I make 267. Still worth my while for the dollars I spent versus the reward I get. Okay, so that's MMM. I like the point and consistency movement with this stock over the last 6 years. Chart's really sideways. Mead Johnson, do you guys know what Mead Johnson makes? Pretty much has cornered the world market for. You guys are all too old. Well, maybe you have grandkids already, and you're helping out your daughters or sons by Enfamil, which is the baby formula that Mead Johnson produces. And yeah, well, they're really famous for their Enfamil product. That's the real thing. I think you could do a best choice is go to help, and then you can go to, I'm sorry, Internet Links, current stock. Go Yahoo. A lot of people like to use Yahoo. Mead Johnson. And, you know, you can look at all the sorts of stuff. Analyst estimates. What do they expect? Analyst opinion. Mean 2.3, 2.3. So they're given the targets and so forth. But this was in 14, so you can't even look at this. Profile. Distributes and sells infant formulas, children's nutrition, and other nutritional products. Enfamil, that's the one that I remember because my kids used it, so they're really famous for that. Anyways, kind of liked what I saw seasonally, like I said. That's why I listed it as a potential, on top of the fact I think it had good open interest. I always did MJH, I'm an MJN. Mead Johnson Nutritional. So we've got some good open interest here at the 105s and 110s. When I did the math calculation, would I expect historically it to move? I had a target of 105.86. That was with Friday's close. It's only changed 9 cents, so it puts it at 105.95. The IV plus target, this number here, $6.52 plus the 125 puts you at 106. The 1 month standard deviation is $8.62. By the way, MJN is coming out with earnings Thursday before market as well. So I listed the 105s, and when I did the math, it was for 159, which is, it's a little bit more. It's 6 cents more right now, which is still about 1.213% premium of the stock, so that's good. I'm going to go through this again for your guys' benefit, so you know how to start using this when you rewatch the video. It doesn't take long. Go into SimTrade, add in the symbol, go to your month, click on whatever expiration and expiration month you're looking at and strike price you're looking at. It defaults to 10% up, 10% down as a slice, and the current stock price of where it closed at. We expect for this stock a historical move of about 5.5%, 6%. So I'm going to move this down to be conservative to 5% move. I know earnings are coming out before market this Thursday. So there's Thursday, it's already there, it's already done the calculation. If I spend $165, it's saying I'll make about $165 in return. So nearly 100% of my money. But that's again based on that day. You can walk this forward and say, okay, there's Friday. I'm making less. And you know what's going to happen. The further I go in time, the less it's going to make, because time decay starts eroding the profit and it's not moving up any place from that 5% move. Again, earnings, we expect to make money on the pop. Okay? Then you can also go to the probability analysis. Really think of probability analysis as probability cone, because that's the study that you add. And you got 106.63, which is really higher. That's what the probability of it closing at on expiration Friday in May, which is what we're buying. So I can move this up maybe 1% to 6%. That puts me at 106.27. Real close to that. I think 7% would be too high. It is. So we'll use 106. How does that change things? Well, if by Friday of this week after earnings it pops up during Thursday, continues to go up Friday, as long as the market doesn't take a dump, you're making about 110% return on your money. Okay. Okay, what else did I see? Well, one thing we do have to talk about, and I like them, is they're not even listed here because I think I put the rating was 4 or higher, and this doesn't pop up on a 4 or higher rating when you run a list, but I think it's a great company we all should obviously be looking at as an earnings trade. And that's, of course, our infamous Apple. Tab 3, just the default settings. You have a 90% historical probability between about now and the beginning of May. Where's it sitting at right now? Well, the regressions are pointing up, which is good. As of Friday, it was at the, about 20% of its extreme movement over the last 6 months. What did it do today? Oh, popped up today above the 50. 50 is above the 200. 75% probability of it continuing going up tomorrow. MAC is kind of flat. So based on a historical probability of 7.53%, I want to probably buy some time with Apple, because it's really mushed sideways ever since it went on to the NYSE. Just meandered sideways. Can't seem to break that 38, $28. It'll pierce it, but it's just having a hard time breaking it. I think this will be the catalyst. The watch phone that that Apple came out with sold out in one day. Even the $1,000 watches, I don't think they had the $15,000 on for sale. I think those are special order. But the iPad also sold out the same day. And the cool thing about the watch is that it was produced and created after Steve Jobs, which really shows the ingenuity of these brainiac people at Apple and how inventive they are. Just a great company. So we're expecting a historical about 7.5% move. Technically, these are the resistance standpoints. I've gone over this trade a couple of times, but it's happening this week, so it warrants us going over this again. There's 110,000 open interest at the 130s. That's what I'm sticking to. That's what I put down 3 weeks ago, and I'm going to stick to my guns on that. Only because if it breaches that, it'll be off to the races, and the rest is going to be intrinsic value for you. It's kind of in the middle of its IV ranking, so it's got some implied volatility build up into it for the unknown event, obviously, which is coming out the 27th after market. It's not this week, but it's next Monday before market. So it's a this week make a decision, trade or not trade, trade. I believe that's what it is. Yeah, 27th. I'm sorry, after market. So by the time we have our get together next week in the traders group, it will have either made it or break it. So it's a decision we have to make this week. Once again, I like it. I'm still bullish on it. There's 14,960 that bought or sold today, more than likely bought. There isn't that great of interest here. Again, these big numbers here, more than likely, since they're $5 spreads, 120, 125s, are people selling the 125s and buying the 120s for protection, taking in a credit of $158. And that's a $5 spread, meaning you only need to put up $500 in margin requirement per contract. So if you got a $10,000 account you're working with, you buy 10 of these, you only need to have $5,000 in your account to trade it. And that means you're taking in $1,580. It pops up, you pocket all of that. If it closes, of course, again, you're going to have time decay. You're not going to probably realize all of that because you're buying Mays. I mean, the thing has to stretch out for time decay to erode what you sold, right, to where it erodes to nothing. Therefore, you keep everything you sold, that $320. And of course, the 165 that you bought will continue to go up. So there's a $5 spread there. You would be able, as a credit, you take that in. The risk is the difference between the $158 and $500 per contract. You can see that here. But again, you're assuming this is a bullish trade, and that's why you're doing a credit spread on it. So that's what I feel that these two are. I don't think these are people short selling it. So I really like this. Analyze this one. Go to SimTrade. Put in AAPL. Go to your expiration month. Buy the 130s for $294. It's all given the ask, even though you could probably get a little bit less if you put in a limit order of $292. But with that small of a spread, I wouldn't worry equivalent about pennies. You're paying $294. It's about $300. Let's say you buy 5 of those, so you're spending about $1,500. And so we know that earnings are coming out the 27th aftermarket, so we're going to put in the 28th. Now, I don't expect a 10% move. I expect about a 7.5% move. So I'm going to be conservative. Put in 5%. What if it only moves to 5%? Well, I'm making $1,400 on my about $1,500 that I spend. So almost 100% return. That's with a 5% move. If it goes a little bit higher to 135, I'm making a little bit more. I'm making about 110%. You can also determine this. This is for Robert and Ira and anybody else watching. If you just want to use best choice and you're not familiar with everything I just went through on the analysis tab and you don't want to go through the learning process, you could do it right here. Just go to your option chain. Click ignore and let it load the Apple option chain for you. Pick out your expiry month. That's the monthlies. The rest of the weeklies. And you can see that's where all the interest is at the 130s. It's currently at the money. So if I click Show Target and I put some price in, if you read this, it says, please enter the stock price of the stop you will use on this trade. It's as if you're buying the stock. Just think of, I'm buying this stock, I want to put in a stop loss. Okay, so just put something underneath this number here, which is the last closing price. I'm just going to put in 127 and click OK. Then it's asking you to please enter a stock price where you think Apple will be in the next time frame of the option expiration selected. So where do I think Apple's going to go to? Well, I think it's going to go up about 7.5%. Now, if I really did the math on this, and I said, okay, Apple is at 127 multiplied by my expected move of 1.0753, really my target's 136. But let's be conservative. Let's go back to what I already did here, which is the 6% move to 135. Okay, so I'm going to put in 135.25. Not even what I expected based on historical move. And simply click OK. When you do that, this column turns to profit. Okay, it's saying at the money gives me about 78% return if it goes to 135. Another way to do it is click the what if button. What if that stock moves $5, 10, 15, 20, 25? Based on the strike price that I choose, which we're choosing the 130s, to get to 130, the stock has to move, well, it's moving about $5. In other words, if the stock moves $5 from 127, if you guys can see this, puts you at what? About 132, 133, not even 135. Right? $5 move gives you about 85%. $10 move gives you 204. So someplace between 5 and 10. So between 85 and 205, if you want to just play the numbers and say, okay, 204 plus 85 equals divided by 2. Yeah, you can make someplace around 100, 144% return. And that's kind of evidenced by what I showed you guys here. You know, you spend $1,500. You know what? Let's just do one contract to make this math really simple. I spend $294. I make $371. That equates to just about 144% return. Okay, so that's just using best choice. You can use these to analyze and say, is my risk reward there? You always want to determine that. Okay. All right, moving on. Illumina is coming up this week. I already listed it that last week, so take a look at that. CFX is also coming out. 6 out of 6 years. Don't like this chart necessarily. I really would love to see this thing pop up above the 200. It's kind of starting to turn up on the MACD. I do like this large open interest at the 50s, and that's what I listed for $1.10. And I think that's, well, it's a little bit more now, 15 cents more. Break even would be 51.25. And you expect the stock to move, well, it says 12.5% if you use best rating, but based on what the wizard originally found based on history and the specific 5 parameters, it's 11.22. So even a 10% move puts this stock, you know, at $55. So Colfax is another one. They are, by the way, coming out with earnings on Thursday, aftermarket. Hanesbrand, HBI, is also coming out. And again, you know, my suggestion is that you always just have this up. All you got to do is type in and, you know, see what the analysts think. That's, you know, so you kind of got a sentiment there. And see, you know, Colfax isn't that strong from an analyst standpoint. Only 4 people say buy out of 14. That doesn't always sway me, but it's nice to have these on my side as well. So Hanesbrand is also coming out this week. Where is HBI? Eight 8 years, 6.5%. Nicely moving up, sitting at the middle of its extreme percent the last 6 months. From a analyst standpoint, predominantly buy. 7 out of 10 say buy. So they're on my side on this in this particular case. So I got history behind me. Got a nice linear upward sloping linear regression. Analysts are there. Not a lot of open interest and excitement, but it's cheap. So I picked out the May 35s on that one. Let's see, what else? I think I put down CO, yeah. Kind of like this, 10 out of 10. Not real crazy about this, but when I look at this, I like that because I've got a 50 that's crossed the 200. I had a gator mouth MACD. I've got a 8 EMA crossing my 21 EMA. So everything is very bullish right here. This is very, very bullish. Even though it's saying tomorrow it may pull back a little bit. Yeah, probably could. But otherwise, this is very, very bullish. Analysts like it a lot. 14 out of 19 say buy. And there's some decent open interest at, I think I listed the 82, oh no, I listed the 85s. I listed the 85s for 61 cents. And I did that because, yeah, this also, you know, my normal trigger chart setups where I have the hull, which is one trigger, John Person pivot study, my second trigger, the MOBO breakout of the Dave Elliott MOBO breakout, third trigger, and the DPO, detrending price oscillator on top of the Bollinger Band breakout. So there's 1, 2, 3, 4. 1 hull, 2 persons, 3 MOBO, 4 DPO. I got 4 triggers that tells me. And again, I'm always looking at where is that 49 position above the 89. It is barely above. I got top linear regression at 85. Okay. CVS is another one I'm looking at, courtesy of Scott Macbeth. And I do actually like it. I love this chart. I love how it bounced off the 200, pulled up, 75% probability it's going to go up tomorrow. History is also pretty strong with a 90% historical move. And very, very strong bullish rating. 17 out of 18 say buy. 14 say strong buy. So this was, once again, courtesy of Scott. Thank you, Scott. And boy, oh boy, 22,990 bought in the money at the 100s, and that's exactly what I listed. But I had it listed as of Friday's close for $2.13. And so you're going to pay a little bit more now because it went up 89 cents as of today. 241 is still a cheap premium, folks, for a $101 stock. Okay, Dr. Pepper's also coming out this week, DPS. They're always a very strong, strong move historically, 6 out of 6 years for the first quarter earnings. You see no blue lines down here, which also tells you that it's never really gone down. It always pulls up from April into July. So this is looking like a strong move. Again, like the chart, 200 is acting as major support. 50 is above the 200. I have a major storm blowing in right now. I'm seeing out the door trees are going sideways. Skies are aqua colored. So if we get disconnected, folks, you know why. MACD's kind of pulling down a little bit, but not too concerned. Okay, Jerry, I'm going to take a look at that in a sec. Let's take a look at DPS. Nice open interest here. Look at that, 2,048 on the open interest for $1.15, $77 stock. That's what I listed. So I like that one as well. Let's take a look at a boring company. Dow Chemical, blue chip stock. But out of 14 years, it's 78 probability it goes up. It looks like it does have earnings coming out. Let's take a look at when. Looks like it's this Thursday before market. History tells me, yeah, stronger probability going up. Not a great rating because it's kind of all over the place in point and percentage movement. All the way from 32.1 to 0.7%. It's not super consistent, but we all know Dow Chemical. It's a great company, right? Let me see if I can download this and get 10 years worth of history instead of 14. See if it changes our statistics. I guess the dogs aren't going to the park today. Well, now we got a 90%. So that's taking it to the 29th. It is sitting way up here, near the 95% of its historical movement. But again, this is very common with almost all the stocks right now. And it doesn't mean that stocks can't continue to go higher, and this whole thing shifts. But generally when it's that high, it's overbought. Generally. Let's see if I can get something a little bit after this period of time. There's a little bit more accurate. 80% probability. I'd probably use that statistic more so than the 90%, 5.38, because it takes me from about now to the beginning of May. So it's encompassing all those years of when earnings came out and what happened afterwards, which is really what's important. So it's a 5.38% move. Wow, look at that. 6,808 contracts bought probably today. It was zero volume. Somebody bought 6,800 contracts at the 75-cent mark with the 51. Very interesting. Very interesting. Of course, we got a lot of short selling here. This is definitely short selling because I don't see anything close to that to create a credit spread. But that's really interesting. What's even more interesting is, look at this, 20,571 sitting at the 55s. Wow. Let's just look on linear regression. Not much from this chart. Got to go to a longer term because this is a blue chip. Now it's been kind of going down. What's 2 years look like? 2 years is different. 2 years is definitely different. And it's starting its trek up. So 55 would be right past the 2-year mid. Evidently, I looked at this at some other time because I still have fibs on here. See, that chart looks pretty good, doesn't it? Very bullish. DPO Mobile pulling up. Person's pivot study triggered last month. This is this last week. This is a weekly chart. So this is all looking bullish. Once again, earnings are coming out on the 23rd before market. I want to analyze this real quick. Any particular, okay, we'll take a look at those. Jerry, any particular strike price you were looking at? Let's be cheap. Why did this? Oh, 68 it is. It's at the 51s. So I guess we'd be looking at the 51s. Why is 50? Oh, there it is, right there. Whew. Boy, I tell you, that's some big money coming in. So what if we bought the 51s for 75 cents? Comes out with earnings this Thursday after market. Let's take it to the end of the week. Not bad. 75 cents for a 339% return. That's about 150, 200% return on my money. That's based on it popping up 10%. How much does it historically go, though? What did we say? I said I'd be more conservative, 5.38. So let's call it 5.5%. So if it goes up to 52.84, I'm still making almost 100% of my money. Now if it goes 52.84. Then if it continues to climb from there, obviously this is going to go up. But this is, again, based on a quick pop. And that's the day after earnings. If it does it the day of earnings, let me make a little bit more, not much. Okay, so let's look at that. And this is a good thing to use. You could say to yourself, which strike price will I make more money at? Which is more cost effective? Which do I get more bang for the buck? Jerry had said, well, he'd probably do at the money. So he'd pay $1.23 instead of going to the 51s and paying 75 cents. So let's see which one makes more money. I'm going to delete the 75 and put in the $1.23 for the 50. And so, yeah, if it pops up 5.5% to 52.84 on the day of earnings, you're actually making a little bit more money because you are closer to the money and because your delta is higher. You've got 51 delta less 2% theta, so you're making 48 cents per dollar movement, where here you have a 44 delta less 2 cents theta, you're making 42 cents per dollar movement. I'm sorry, 38 less 2 right here. So that's actually only 36 cents. So it's actually, you make more profit with a 5.5% pop, which you expect historically, doing the 50s. So nice looking. Okay, Earl brought up 2. INSY. Don't have. Must, I could add it. I don't know what it is. I'm just going to assume this is a NASDAQ company. 4 symbols. I'm going to add it. Must enter a valid name. Okay. I'm going to INSY name. How about that? Save symbol. Download the data. Yeah, there's only 39,617 records on it. So I can take a look at it. Well, that's what Best Choice shows. 1 out of 1 year, that puppy tanks. And it is sitting here in linear regression. It's pretty much straight up. If I went to 2 years, I can't even add earnings. It's not even showing any earnings. We don't have it in our database. So I've only had it since May of last year. Really, that's what we're showing. So looks like it's screaming upwards. Not good from a 1-year historical, which you can't base it. I like this chart though. Everything tells me upward, on and upwards for this. Man, it is pouring buckets outside right now. No open interest for me to be able to take a plug at that though. So I would pass because of that reason. Or as Kevin O'Leary was saying in the Shark Tank, I like to make money. And I don't see money in this, so I pass. Or I'm out. That's what he says. And good old JPM really threw me for a loop. I thought that was people were going to tank, but nobody did. Everybody just started buying more and I think took off after earnings. Came in at $1.45 and everything's really froggy. See, this was when I thought it was going to go down. It did not. So everything's bullish on this. JPM is definitely bullish. Of course, I got a doji today, but boy, look at that. 50 cross to 200, 9 cross to 21, open MAC. Pretty much off to the races here. Let's see how much strength it has to go on up. Well, 2 years is probably going to be more definitive. Top of that is 64.53. We got 66.93 for my linear regressions. And from a historical perspective, it is a 70% probability long based on best rating on whole zone. Let's make sure that I got accurate data. Okay, highlight that same area. Well, come May, I got a 90% probability this thing tanks. Which, if you really think about just logic, where is it sitting at? At the almost 90% extreme above linear regression. Typically, stock breaks linear regression price line. If there's no other momentum that's going to push it forward, and it's had a big run, which it has from $59 to $65, that's a solid $7 move. $7 on a $60 stock is over a 10% move. Typically, there's going to be a retracement. Probably down to one of these MAs, on the low end about 60 for the 200. Maybe about 61 on the 50. Any other stocks you want me to go over? Running over a little bit right now. Not a lot, by the way, from, forgot to bring the economical standpoint. You got housing on Wednesday, new home sales on Thursday, and durable goods at Friday morning. Other than that, they're doing a lot of note announcements on Thursday, but nothing else that's really going to rattle the market, other than stuff out of Greece or China, some unknown event. Okay, any other stocks, guys and gals? No? Okay. If not, thank you for attending. And once again, be cautious in your trading. Use your smarts, use stops. And I wish everybody good trading for the week. We'll talk to you guys next week.